Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Extra Space Storage, and let me tell you, this company's been making some moves you might not expect. I thought I was just renting a storage unit, but hey, before we start, if you're tired of corporate jargon and want clear insights, hit that subscribe button. Plus we've got a Discord community linked in the description. Come chat with us. This quarter, Extra Space Storage is showing revenue growth, but also some interesting financial maneuvering under the hood. Are they expanding smartly or just racking up debt? Let's find out. First, a little disclaimer. A forward-looking statement is basically where Extra Space Storage says, hey, things look good now, but don't blame us if they change. They're covering their bases in case the future doesn't quite match their plans. It's a standard part of these reports, so let's move on to the juicy stuff. Alright, let's dive into the numbers. Looking at the balance sheet, their real estate assets, that's all their storage facilities and land, are worth nearly $24.7 billion a year. It means they're still investing in property, which is good for long-term growth. Now, they do have a good chunk of debt, which we'll get to later, but that's a lot of storage units. It's always worth keeping an eye on if they are growing too aggressively. Let's check out where the money is coming from. Property rental, which is the heart of their business, brought in about $704 million this quarter. It is up from last year, so more people are paying for storage. Are they just moving things? Now, what's that mean for investors? Their earnings per share, or EPS, is $1 punch for a 28. That means for every share of stock you own, the company made 128 cents in profit. Extra Space is up from last year. Not too bad. Now let's get a little technical and check cash flow. Their cash flow from operations is $481 million. This is the money they actually have coming in from the business. If this number is trending up, this is a good sign. It means that they can keep the money rolling to keep the company in good health. This is an important number to look at. It is at $3.9 billion from debt. What does that mean? Well, it means they're taking on billions in loans to fund operations, expansion, and just other operations, expansion, and just other operations, expansion, and just other operations. Of course, this is offset by money going out. $4.6 billion, this is probably the story here with them. They are taking on more debt to try and grow. Where are they putting this money? Well, acquisitions, they bought 17 more stores and some investments to real estate ventures. Acquisitions are a gamble. Sometimes you get a gem, other times you are paying for someone else's trash. Let's talk interest rates. I can see here that they are using interest rate swaps to manage their interest rate risk. What is that in plain speak? It's like they're betting on which way interest rates will move. If they bet right, they save money. If they bet wrong, they lose money. What does all of that debt look like? Laid out totals. To about $11.5 billion in secured notes, $1.9 billion in unsecured loans, and $8.6 billion in unsecured senior notes. Those are like fancy IOUs. The company needs to make sure that it can pay all of that or it will not be good. Let me rephrase. It's important to know that they're making enough money to keep the lights on, but they also have to pay back that huge debt. The company has two main segments, that is just the different parts that they run to make money. For regular old self-storage, they made $480 million for tenant reinsurance. That is basically selling insurance. They made $67 million. The second one is higher margin business, which is good. Keep it in mind. What about the short term? We expect to fund our short-term liquidity requirements. In accounting speak, we will pay the bills, so that's a good thing. But Extra Space say that they are expecting positive cash flow, but it is something to watch. At some point, you can't just brute force profitability through debt. Last thing, a little note of a director selling some stock. The CEO is planning to sell some stocks, and so he put a trading arrangement. It is done so that the CEO doesn't get accused of knowing insider information when selling the stock or stock manipulation of some sort. I'm not saying something is happening, and probably nothing is, but there are regulations to prevent insider trading. Overall, they look like they are just fine from insider trading. Now, what's my overall take on Extra Space Storage? Well, Extra Space Storage is growing. They're buying up real estate. Their core business is making more money year over year. But at what cost? Well, the biggest risk is that debt. A jump in interest rates or a slowdown in the economy could put a squeeze on their cash flow, which will be a problem. All of that has happened recently, so it's important to watch out for. But with all that said, Extra Space looks like it will keep on trucking. Alright, that's our breakdown of Extra Space Storage's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. If you want to discuss or learn more, come join us in the Discord. Thanks for watching. See you next time.